Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Thursday, November 8th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. So the markets have continued to decline today, not down nearly as much as we were yesterday, but in all fairness, still a decent decline. S&P's down about 9, NASDAQ down 26, Dow Jones Industrial Average down about 65 on the day. Now the key here is to recognize the levels, because a lot of people are getting very scared out there, and I've noticed that in the media. The media hype is getting very, very bearish. People are saying, oh, you got to stay away from Apple, you got to be this, you got to do that, sell out of everything because of taxes at the next year and so forth. That actually makes me a little bit more bullish. I've been bearish until today, and then when the markets hit a low today, I'm beginning to turn more into a little bit more of a bounce candidate. Now, I think ultimately we are going to go lower, but there's actually some money to be made possibly on the long side if the low of the day today holds. And again, let me show you the reasoning behind this. Number one, the low of the day, this blue trend line, if I zoom out, I have to zoom a long way back, but if I zoom all the way back here, all right, all the way back, look at the gap right there. So this is what's called a gap window, which is a significant support area. So gap window, and it's held up so far. This is at the 138.50 level. So 138.50, which we're about 25 cents above right now, this is what's holding today so far. In addition, it's not just good to have one level. You always want to have multiple levels. And the one other level I'm kind of noting here on the daily chart of the SPY, the 200 MA. So again, a nice little level right there on the 200 MA, which we kissed. So that also leads me to believe, again, if you take the contrarian view and you look at the bearishness out there in the media, the average investor getting very, very scared, it does tell me that you could be due for a little bit of a bounce in the not-too-distant future, very possibly tomorrow. So again, I would not be surprised if we bounce tomorrow in the markets. It should only be a short-lived bounce, though. I want to make that clear, guys. You look for a consolidation bearish bounce, which will be small upside bounce, and then I do think we head lower. But again, based on how many bears are out there, the levels tagged and so forth, I'm going to be in the camp that we're looking for a little bit of a bounce going into tomorrow. All right, having said that, let's take a look at the intraday on a short-term basis, zooming in. Again, we started out with a little bit of a move up. We actually had a decent gain, but notice how this pivot area right here was never taken out. The 50 MA is still here as well. That tells you that the market's in a weak position. Again, we started to fall. We came into yesterday's lows right here. You can see the hammering, finally broke through, and that's where we went to that next level. Off of that level, you had a tremendous bounce, but the markets came up to the 20 MA, and also notice this. So see the bounce here? How you went up to the 20 MA? Look at the low from yesterday. So the low which we broke becomes resistance, and to the penny, literally, we went right up there. And that's your resistance point. Remember, when you break through a low from a previous day and then bounce back, that low is now going to be resistance. It was support when you were above it. Once it breaks and then you bounce back, it becomes resistance. Very important to recognize that, all right, folks? Either way, let's see where we end today. This is the way I'm looking at it, folks. If we can close above the low from yesterday today, it puts me in a camp of thinking there's a 75 to 80% chance of a bounce tomorrow. If we close between this low and this little pivot from yesterday, then I'm in the camp of a 50-50. And if we close below the lows from today, then I think the market's heading south still. So really look at it like a simple pivot right now. This is a very easy way to analyze the markets, and it will tell you with a high percentage which direction it's going. Just go by what I just said there. All right, let's take a look at some stocks out there. Apple's getting pounded again, down about 15 bucks. This level on Apple, though, has been very, very nice. This level's holding up amazingly well, which is the 541 area. So again, notice we hit it here, bounced, hit it here, bounced, hit it here again, and small bounce. Can this level hold? If this level breaks, folks, you may be heading to 520. 520 on the daily chart is your next big level, and again, that's right around here. And again, Apple's definitely oversold. There's no doubt about it. The question is, can it bounce in the short term before it heads there? It eventually will head to 520, but I think you are due for a bounce as well. And again, I think if the spider is set up for a bounce based on the criteria I just gave you guys, then you'll also be looking for then you'll be looking for a bounce in Apple too. I mean, everything should bounce together in theory, right? Google, guys, down about 13 bucks today. Google, as it continues to fall, this is your swing trade buy level. I covered that in yesterday's free video for you guys. That's a no-brainer right there. And it keeps going there. 636, 635 area would be a sweet level to pick it up as a swing trade on the long side for a bounce. I love that area myself. Exxon's another one. Very simple, guys. You're looking to swing trade Exxon. The 200's right there. You get to the 200 around the 86.50 level, it's a swing trade bounce candidate. Very simple there as well. So, I mean, again, mostly red on the screen. JPM is actually one of the few stocks that's up today. That had a buyback announced this morning, so there's a little news there that's helping it. Even that stock is off the highs of the day, though, dramatically. And again, it opened very strong and then just fell. Notice, again, for those of you that have taken the methodology webinar, any methodology, if you've taken Nick's or mine, if you took mine, you know about confirmation, which is awesome. You never confirmed above the 20 here or the 50, therefore the downside is likely, and that's exactly what's happened here. It's kind of faded and come back below, so kind of intriguing there in my opinion. All right. What else do we want to cover here? Goldman's down $2. Goldman continues to fall. Goldman level of support for a buy swing trade is going to be really, I think, right here. I think right here you get a bounce. So there could be a little bit more downside in this chart. There's a lot of support right here. Again, that's right around the 113.50, 113 area or so. Very, very good level. It's only about $3 away from there now. All right, guys, let me just go back to the spiders. Let's keep an eye on the spiders. Remember what I said before. Very simple to analyze this market. Very, very simple. All right, if you close below the lows from today, by the end of the day, at the end of the day you close below these lows, you're going south. If you close in this range between this blue line and this blue line, there's a 50-50 chance of a bounce tomorrow. And if you close above this blue line here, there's a 75-80% chance of a bounce tomorrow. Very simple. Go buy it. Come join us here at InTheMoneyStocks.com. I will teach you my proprietary secrets. Nick will as well. You take the webinars, you join the Intraday Stock Chat or the Research Center, take the 7-day free trial to those. You can learn so much and get awesome swing trade alerts or day trading calls, all right? Research Centers for swing traders and investors. Intraday Stock Chat is for day traders. There's a 7-day free trial for each one. You can do both. You can do one, whatever you prefer. We are here to enlighten the average investor. We're here to help you become a profitable trader and compete with the pros. You can do it. We can teach you how. Take care, guys.